This video is brought to you by the award-winning prop firm, Forex. Righty-ho, folks, welcome to this video with Dex Diamond. So Dex is a colleague of James from Elite Traders. He was on the show this week being interviewed. Now, Dex has a slightly different way of approaching the market, and he uses Forex bank reports, which you're going to find out how he leverages those to find decent trades, entries, get things that move in the right direction for a while. It does seem like a bit of a cheat code to the market. So guys, this is what you're about to find out in this feature-length video, because it is quite long. But there's nuggets in here that you're going to be able to sink your teeth into. And also there is a coupon code, I believe, that we've got that you can use. So check under the video afterwards, because that coupon code can get you, I think, some money off these reports if you are looking to go down this route. So folks, without further ado, let's meet Dex and get on with the video. Forex is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So what sets Forex apart? Well, it's their verification stage payouts of up to $30K in as little as 15 days. So you can receive your first payout prior to becoming a fully funded trader. Just complete the challenge phase and verification stage without violating any rules to receive your first payout. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Up. We've got Dex Diamond in the house. Welcome to the show. I know people probably don't recognize you, but what you're going to walk through today is we've enlisted Dex here to basically give you what an ex-institutional trader sees from a fundamental point of view in the markets, what they use, that sort of thing, to give you guys something to hang your hat on if you're looking to, you know, tie your technical analysis into some fundamental stuff, or if you're just looking to get into fundamentals as a whole. So welcome to the show, Dex. How are things?
Thank you. Yeah, no, good. Thanks. It's a pleasure to be on the show. It's it's cool to do these little videos and whatnot, and show people our style of trading, my style of trading, and what we do over at Elite Traders as well. Yeah, look, basically what I want to talk about is like, there's so many different trading systems out there. You always got technicals against fundamentals, and they always seem to clash. We're not here to do that today. We basically want to talk about how you can use both together, right? So I'm basically 80% fundamental. Our traders over at Elite Traders, 80% fundamental, someone even 90% fundamentals. And we use technicals in a sort of a broader spectrum to go look at sort of a price level, not so much trend lines and fibs and all this sort of stuff. It's just more like fundamentals line up. How can we enter the market based on technicals as well? So we're here to do that, so we can get both the best of both worlds. So there's no clashing between people in the comments, hopefully. This is better, this is better.
Yeah. Okay, brilliant. Well, let's share your screen and have a look at some of these reports.
Sure. All right, so yeah, so basically what I do is every single day I get these reports, and these reports are actually accessible. We do provide these reports for people that sign up as well. But they basically give this whole overview of analysis of what's happening economically. You won't see many technicals. You will see some technicals here and there. Credit Suisse like to do a lot of technicals as well as fundamentals. But most others you'll see a very sort of fundamentally based, macro-driven based, and all that sort of stuff. So the first report we got here right in front of us is Credit Agricole. Credit Agricole, I'm sure many people have heard of it, especially if you live in Europe. Huge investment firm. They've got quite a lot under management. So it's always worth noting what they're saying in the market. They've got quite a few strategy experts in there. So what I like to do is, first thing in the morning, is I don't look at the charts, because I don't want to have that bias of what's happened overnight. I look at this and I go, what's happened globally? So basically, they got Asia overnight, euro, pounds, NOK. I don't really pay attention too much to NOK. NOK can affect gold though. Oil. So that can sort of, I do look to read that as well a bit. We've got quite a few reports here. We're not going to go through all of them, but we're just going to sort of break them down a little bit and go, how can we use that with our trading? So if we look at, let's say a euro here, for instance. Anyway, there's a lot to read there. So basically we look at all this sort of data, we piece it all together, we read the pound, read the NOK, and we go, what's happening in Europe, what's happening in, for this one, we could go euro pound, right? We could read this, whether a lot of this is negative right now. You could read a lot of pound, which is also negative as well. So you don't really want to be buying euro or pound together at the moment. But we can go into more sort of detailed ones. For instance, ING. I don't know if some people haven't heard of ING. Surprisingly, it's a great big bank. Bearish sentiment cooling off. Recent discussion in 2023 FX outlook. We are quite expecting a clean bear downtrend for the current levels. So they're expecting a bearish dollar, which could then you can go to the markets and go to the trend, the charts and go, we'll start looking for US bearish outlook and that sort of stuff. Euro, ECB president, we just spoke about that one. So there's a lot to go through. I don't want to really just sort of read everything. I'm just kind of sort of picking bits and pieces here and there. If we look at, let's go to Credit Suisse. So there's a Credit Suisse. These are more technical based, which a lot of people love. Euro saw a volatile session yesterday, early strength that took the briefly to a long-term 200 moving average. So they're talking about a 200 moving average. Usually it's not an EMA, it's a SMA, simple moving average. Currently seen at 1.042. Where's our charts? Let's get a euro dollar. Put on that 200. So they're talking about the 200, how prices are now testing that 200 moving average right there. We continue to see the scope further consolidation below the near term, but our broader bias stays positive for the eventual sustained break in due course to clear the way for further 105 and then test the resistance at 38.2. So right through there. So they're talking about these levels here. So if it breaks 105, did they say 105? Yeah, that's so basically that level there for a retest of 38.2. Which comes in at 1.063.
So these guys are essentially giving you the technical analysis they're looking at.
Yeah, technical
and the levels they're looking at.
Correct. Yeah. Technical and fundamentals. So basically that's what they're saying on euro. US dollar against the Japanese yen. So US dollar has been unable to sustain its latest foray lower for the support of 61.8% retracement of which shows August at 138.63, managing to hold for now on a closing bias. While we see the scope of further near-term consolidation above here, we maintain our broader negative outlook. We look for an eventual sustained move back to the 38.6 or below 38.6 for fallback low of yesterday's at 137, 135, and eventually seeing 133. So they're expecting a dollar yen 133 outlook. So where's 133? So they're expecting dollar yen basically to come down to these levels here. So how you could use that, this is a 5-day chart, by the way, so it doesn't look that long. How you could use that in your trading going, all right, cool. So we know there's a big support there. How can we get in on this trend and sort of write it down? Well, you know that ING have a negative bias on US dollar. And we know that, was it this one? Credit Suisse have a negative bias on the US dollar. So we can start using that and going, well, let's maybe jump down to the 4-hour and go, how can we get in on this trend? And we're basically looking for an area to enter. I'm not very picky on areas. Like I don't wait for pin bars. I don't wait for head and shoulders and that sort of stuff. I would just go, cool, that's a good area of resistance. I'm just going to set an order there. I don't like to have very tight stops, right? I'm definitely not going to have tight stops. I like to sort of have a little bit broader and maybe look at something like that and set your sell limit stops up here and take profit down at that 133 level through that. And that'll give you like a 2.74% risk reward ratio, which I'm happy with. So that's about the amount of technicals I do. I don't do a whole lot of technicals. It's more reading charts, reports, and going, how can we piece all this together?
So just to sort of summarize what you're doing, so you're basically going, here are some reports that are saying, I mean, the thing that I didn't get was there were, these reports included levels that they expect price to go to, which in theory is a bit like a cheat code, isn't it? Like if you know where price is going to go, then it's a case of let's just wait for a retracement before it gets there and try and get in and protect our stop with a price where it's not likely to go. So it's quite a I suppose sneaky approach to a certain degree. I mean, how easy is it for people to get their hands on these reports?
It's pretty easy. So we actually have them at Elite Traders. So our website, I don't know if you can see the website right now,
Yeah.
You just go to the services, bank reports, and you can just sign up monthly, 6 months, yearly, sort of stuff. But we send out, usually there's about 5 to 20 reports a day. It's just a matter of really breaking them down. If I had time, we would read this whole thing and would break it all down. But it's kind of hard to sort of just pick little parts here and there because, you might read this little part and it might, in the early stage, mean they'd be going like talking about euro bullish, but then all of a sudden it changes to why they're turning bearish now. So it's kind of, you have to read the whole thing because they give like this. It's not as easy. They don't just go, oh, euro bearish, or but they go, we're starting off looking euro bullish, then reasons here we're going to go bearish. So there is a lot of reading, but I find the reason I like these types of trade and these types of reports is because when you're looking at technicals, now look, technicals and fundamentals are both great. There's no right or wrong. People make money. Technicals, happy for them. People make money. Fundamentals, happy for them. I like to use both together. The reason I like the fundamentals is because the trading system is going to be the same. If euro's bearish economically, it's bearish for everybody. It's bearish for the market. It's bearish for Credit Suisse. It's bearish for MUFG. It's bearish for everybody. Technicals, it can be bearish. It could be bullish. It could be stagnant for thousands of people. So I like to use the fundamentals to get that broader outlook, and the technicals to get that entry point. Like on US dollar, Japanese yen. Talking about where we're going to enter. There's a good level of resistance. There's my technicals. My stops are going to go above here. Basically, the reason I picked that level is I just want it above basically that little point right through there. That little sort of, I guess you could call it a tiny little bit. If you zoomed in on a 1 hour, it'd be a little bit more. Yeah. And it gives it enough room, right? And then to, obviously take profit down at that 133 level. So it's good for that sort of stuff. There is a lot of reading involved. I probably spend, I'd say, about 3 hours a day reading.
I mean, with so much in there, I mean, how do you sort of know what to distill out that's important and then what's not important, or is it gut feel kind of thing?
No, see, I skim a lot of it, and if I go like, for instance, this here. So where is it? I just had it there. I need to go. So this one, I'd read this part here because it's talking about ECB and all sorts of stuff, but I'm really not interested in like all these exotic currencies. I'll read about that one, the UK. But when it comes into like the Brazilian real and that sort of stuff, I'm not going to bother with that. That's not going to bother me. ING, I like ING reports because it's very small, straight to the point. Euro, pounds, US dollar. Goldman Sachs are very much more, you see this sort of stuff, which I do read into a little bit. I'm not going crazy over this sort of stuff and looking at all the energy and food and services and all that sort of stuff and going in. I'd rather just read about it rather than look at those little charts right there. So usually those ones I kind of just click out of. These ones, I'm not going to read those. I'm click out of that. I just want to read what's happening in US. Why is the US going down? What's happening in Europe? Why is the Europe going down? That sort of stuff. So here, straight into the Australian point. While the Australian economy remains strong, the RBA believes it's less aggressive than the Fed, as Australia is not experiencing a wage price spiral like the US. A fall in Australian rate different long with China's weak growth will keep the Aussie dollar under downward pressure for the coming 3 to 6 months. The soft economic landing locally and globally and recovering in China's growth improves Australia's US dollars perspective for mid 2023. So they're basically saying there is Australia, US they're expecting downtrend until mid next year. When I read out loud, I'm a lot slower. It's like when I read in my head, I'm like a lot more smoother.
Yeah,
reading out loud, I just notice that.
Yeah.
It's like talking crap here. So we can go to the Aussie dollar and we go, okay, cool. So who's this? Credit Agricole. I wouldn't just take one perspective. I'd go read about Credit Agricole and then I'd look for instance, who's this? JP Morgan. Do they have an Australian outlook? Not so much. MUFG, that they always have massive reports. I'm not going to read that right now. These guys don't, I know that. But usually I'd sort of like to read at least 2 reports on the Australian of what's happening. So here, Credit Suisse. Australia has breached a downward trend from April 6-7 Australia has managed to achieve a daily close above the downtrend in November of 0.6742, which suggests the more sustained shift higher. The pair will with weekly MACD turning higher as well as base October, in our view, is likely to promote further gains for the next month. With this in mind, resistance shifts to 38.2, 38.2, so at 68.71, that level there. So it's not too far, like it's right there. Chasing the whole decline from 2021, 0.68 above, which could clear the way to 200-day moving average of 6.9. So see, they're using pure technicals in this one. This is why I'm saying there's no right, no wrong.
And look, it's interesting that they are using technicals, and they're using kind of, the simplest technicals out there, the levels that people all look at and go, why does a 200 EMA, 200 SMA work? And it's because this is what these guys are using. Why do their flips work? Because that's what they're using. It sort of makes a lot of sense in the end, doesn't it?
It does. Yeah. And you might get a lot of like institutions. Institutions are very much the same. Like you get other credit switch reports that are all fundamentally based as well, but they might have a small team that's technically based, and then they sort of work together. Every single institution, every single bank, will have a technical based system as well. They will look at charts. They will look at levels like that. Most of them will take heavy fundamentals in the base, the same as I do, and then the technicals. This one is a pure technical report, which I like to look at sometimes as well. I like to look at this and just go, okay, what's their technical overview? But a lot of people also seem to think that institutions have these crazy, insane trading systems that no one can get a hand of. This is the same as some Instagram trader is doing right now. It's got this fibs, it's got his MACD, it's got his support and resistance lines. You know what I mean? That is, there's no big secret to trading. It's just what works for you. This might not work right now, this trade. This trade could turn against them, but in the future, it could work for them.
And what kind of win rate do you typically get when you follow these, like, I suppose, correlated bits of advice that, I mean, is the word correlated? No, it's not correlated. It's confluence. The confluence of the advice. Do you, how often do you find that these trades work out for you?
So with Credit Suisse one, I like to look at theirs and see what they're looking at, but I don't directly trade based on anyone's idea. I put it all together and get my own idea out of it. I've got a win rate about 50%, maybe a little bit lower at times, 45%, but that's a good win rate. Most people think you have to have 70, 80% win rate, which is, a lot of people don't have that. If you have a 45% win rate, 1 to 3, 1 to 4 trades, you're making money hand over fist. If you've got, look, I've met traders that have a 30% win rate and they're killing it. They're doing absolutely well. They might have a 1 to 4, 1 to 5, 1 to 6 risk reward ratio. So just remember, like, something in trading is the lower win rate, the higher reward you can get. So if you have like a 40% win rate, but a 1 to 4, 1 to 5 risk reward ratio, the more risk reward you go, the lower your win rate is going to be. If you have a 70% win rate, your win rate might, your reward might only be 1 to 1.5, 1 to 1 type stuff. So, to have like a 80% win rate, but a 1 to 6, 1 to 7 risk reward, big question in that. And
do you do any like trade management when you've got into a position, i.e. moving your stop to break even or trailing it or anything like that?
No, not usually. I'm not big on doing it too quickly. So I won't sort of enter a trade and straight away, as it's 20% profit, go, all right, now move to break even. The only issue there is I have is, for instance, where's that dollar yen? If we were to enter this one and we sort of, it comes up and then it comes, let's say it gets down to this level and then it comes back up, it comes back down before it actually goes down to profit. You miss out on the whole trade and then you get scared to re-enter because it's gone, stuck me out at break even. So if this works out and let's say it gets down to this level here, then I might set it to break even, but I'm not going to do it too quick. Usually if it's past halfway to my take profit, I might then set it to break even.
And I suppose during the trades, I mean, you're getting these reports daily, so you're obviously getting more and more information coming through. And does that give you more confidence to hold on to a position?
It does.
And perhaps not move your stop or even, I mean, would you ever exit in your loss if not a full loss, but a partial loss if you saw something in one of these reports that was against what you had originally thought?
No, I never close it too early, too late. Stop loss and take profit is there for a reason. You set your stop loss because that's your insurance that, okay, if it gets there, I'm out, then I'm wrong. Only when it hits a stop loss are you wrong. And only when it hits take profit are you right. So until it hits one of them, and it's going to hit one of them one day, you're neither right or wrong. So you've set your stop loss, you set take profit for a reason. You mess with that reason, that messes with your risk to reward ratio as well. That messes with your win rate. So when I test my trading system, I test it based on it hitting stop loss and take profit and never closing early. And I know that gives me like a, I don't know, 49% win rate. If I start to mess with that, my win rate might go to 42.
And how do you manage the I suppose the entry news? So let's call it news. The fundamentals you're using to enter a position. Do you have to like sort of log that down somewhere? So in 3 weeks' time when the trade's underway, you still know the reason that you decided to get in? Because I'm assuming that if these reports coming out daily, then you might decide to get into a trade one day, and then 2-3 weeks down the line, that the whole sort of narrative has changed around what these guys are doing, and so how do you manage that sort of like knowing what's happened in the past?
I keep the important ones. So if I have 20 reports, there might be only 3 that I actually like, and I'll keep those in a file, and I'll date the file November 6th, 2022 or whatever. But after the trade's done, I'll kind of just delete it because I've got new reports coming out anyway. But I don't I'm not big on writing stuff down by hand. If I write down by hand, I'm going to lose that piece of paper. I know for sure. I'm going to get bored and make a paper plane out of it. So I don't keep a notepad with me at all. Like my desk has no notepads on it. It's mostly got kids' toys and that sort of stuff. So,
well, I suppose the other thing is if you're like, once you're in a position, it sounds like you are just, that's it pretty much. Yeah, you're holding that position until it either wins or loses.
Exactly.
And therefore, you don't really need to know what the initial reason was to get in, because you're not going to manage the position.
Well,
anyway.
I always remember the reason I got it. So I got into the reason for instance, we sell dollar-yen. Why did I get into that? I will read that report in full detail, and I'll remember why I got into that trade. But every single day, I'm keeping up with the new reports. Why is the US dollar going up or down? Why is the yen going up and down? Why is this happening? And that will also give me the confidence. The specific report that I read that made me make that decision go, yeah, I do want to look at selling now. I will keep it so I can refer back to it in case I miss something. I'll go laying in bed 2 a.m. go, did I read that report right? And I'll go back and read it again in the morning. I won't get up at 2 a.m. But then after I'm very confident, I'll just sort of delete the report because I don't like to keep them all on my computer.
So that's interesting that you sort of you're obviously not trading every day, right? These reports are coming out every day. So what is it in a particular report that gives you the sort of green light to place a trade?
Yeah, look, so these reports here, there's not much given me. I've read most of these. It's not a whole lot that's given me on these reports at the moment. A lot of the times you'll see a very, on the ones that are very important, you'll see, this is basically a broad outlook on euro and pound and all sorts of stuff. You'll see very detailed, we think the pound's going down because of this. You'll see JP Morgan say the same thing in different words. Credit Suisse say the same thing in different words. That's when I'll go, okay, cool, I want to sell the euro against the pound or whatever it is. And that's when I'll just sort of go to the chart and place an order or get directly into the market, set my stop loss, set my take profit. So if you've got 3 different banks going, we're selling the euro against the pound, you're going to want to sell the euro against the pound, right? It's just a matter of where do I get in? It doesn't really bother me because, again, for me, it might be a bit different. I've got a large amount of capital. If you've got $1,000, $5,000, $10,000, you might have to be more specific on when you enter. With me, I'm not going to say how much capital I have, but I've got a bit more capital. I can just sort of enter here, set my stop loss here, set my take profit there, and just walk away and still have a good, risk reward, but also reward, if that makes sense.
And so if these banks are like, we'll say, the euro, the pound is weak, and you're going, okay, well, that's a green light for me to place a trade. Are you also looking for something around strength in the euro, or are you looking for, is that going to give you even sort of more reason, or is it just like, well, the pound's like one of the closest pairs is the euro, so let's just sell it because everyone's saying, sell the pound?
So I do like to look at, if I'm looking at selling, for instance, let's say this one, Aussie, against the US. Now we know that they're looking at US negative. They're also looking at Aussie negative. I'll probably go, don't really want to touch that because both are turning negative. But if they turn around and say on this one, Aussie is very negative for this reason, this reason, this reason, US strength is going to kick in because this and that, I might go, cool, I like that. Strength against weakness, weakness against strength. But I don't want to sell 2 weeks against each other. I don't want to buy 2 strength currencies against each other. Another way to do it very quickly as well is look at COT reports. COT reports are updated a little bit less than these reports. These reports come out every day. COT is mostly updated weekly or something like that, every few days. But COT reports are great because they can show you leverage funds are buying this amount or selling this amount, if that makes sense as well. So yeah.
Cool. And is there anything else you want to tell the viewers out here, to something they should be looking out for in the fundamental space that we haven't touched on today?
So a lot of people ask me, do I look at daily economic news? I don't look at the economic calendar at all. I don't care what's the CPI that's coming out today or whenever. I care about the CPI, but everything else around it and how that's going to affect the economic outlook. CPI alone is not going to change my bias, especially for a long-term trader. That is, if you're short-term, it's going to affect you. Me, long-term, I hold for weeks, days, months. It's not going to affect me as much. So, look, if you're having trouble trading and you don't have confidence to hold a trade, this looks great technically to go long, but I'm not too confident, that sort of stuff. Everybody says back test, which is great, of course, but maybe you need that little bit more extra reason why you're holding long New Zealand dollar, right? And it could be a report like this where a bank comes out and says, we're buying New Zealand dollar as well. And a lot of the time, none of these reports have it right now, but a lot of the time you'll see the banks actually giving out their trades as well. So these are all older ones. This is the 14th of November. So the day that on the 14th of November, when these reports came out in 2022, they had where they were selling and buying it. They had the stop loss entry targets. So in these reports, they'll be like, we're buying euro dollar at this level. Our stops are here. Our take profits here. That gives you a huge confidence boost as well, going, hey, I have that too. So
that's interesting, eh? And you wonder if, in a way, is there any reason that they send these reports out?
Yeah, look, a lot of these reports have to be made because one, research, two, do you mean send them out to the public? They're not public.
So you obviously got access to them, so they're obviously sending them out at a cost. I suppose is it just it's probably more. Sounds like there must be more benefit, or there's a legislative reason to.
Well, it's internal. They take it out to their teams or the research team in their banks and whatnot. These reports aren't widely public. It's very, very hard to get your hands on, which is why we were like, cool, let's create a service around it. I'm allowed to. It's not illegal, so I'm allowed to sell these reports. I've already looked into it, trust me. So I was like, look, no one else can get these reports. I may as well sort of be the service that does that.
Yeah.
So I get them sent to me every day by various sources and whatnot. And then I sort of go, cool, let's put it all in one bundle and sell it to, if people want to subscribe to it. If they don't, who cares? But these reports, they create them not only to have that reason why they're taking trades, that sort of stuff. They need to have a reason to sort of be able to back themselves up if, I don't know, someone tries to accuse them of insider trade, and the SEC comes to them and go, you've won 10 trades in a row. Well, here's our analysis.
Yeah.
Just go look at it, and they go, okay, cool, fair enough. You've done all your due diligence. There's my kid in the background. Yeah. Daddy duties today. So yeah. But look, if you're having trouble, I would say if you're having trouble in trading, you might need that little bit extra. Try them out.
What about sorry, last question before we wrap up here. What about the interest rates? So interest rates are sort of the most common thing traders will know is something that's going to fundamentally shift or reverse a market. How do you factor those in? Changes.
Yeah, so all these will already have all that priced in as well, like interest rates, blah blah blah. Before an interest rate decision comes out, they'll be talking about it on these reports. We think this is going to happen. It's going to go up 2.5 or 0.2.5% or whatever. When it eventually comes out, the report will come out the next day of what their economic outlook is now that the interest rates have changed. Interest rate changes whereas if for instance, you're in New Zealand, I'm in Australia, if you've got a stronger interest rate, if let's say yours is 5%, ours is 0.25%, your economy should be doing better because more investors want to put their money in a higher interest rate currency. So that's where carry trading comes involved, is where carry trades are basically where large institutions, they won't set take profit, they won't set take stop loss, they will buy into a currency that has a higher interest against the lower interest, and they will look to carry that throughout the year. It's not a short-term stuff. It's not something most retail traders can do either, but you need a lot of money for that. I don't have the capital for that because you need to not care about stop losses. So that's basically carry trading.
Brilliant.
And interest rate trading.
Hey folks, you ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Superb. Well, look, I think there's a ton of stuff in here that the folks can get their teeth into, either to support what they're doing technically or to just, if they're looking to get into the fundamental space. It's definitely opened my eyes up to what's available and how you can use it. And I see the benefit of it now, whereas back in the day, I used to struggle with, like, how on earth do you decipher all these reports and what people are saying? But now it makes a lot more sense.
We do have webinars where we actually break them down for people and like, this is what this means. This is what this means. Obviously, we can't do it on here. There's not enough time. And sorry for talking so loud. I'm kind of nervous doing interviews. Like, I'm not very public with it, so I'm kind of like,
it's so good
talking fast. I'm a bit nervous doing on camera. But look, we do have services as well, like webinars where if you don't understand what this means, we do webinars where we read it all and we break it down. This is what that means. This is what this means. So it does become more understandable.
Okay, well, look, superb. Thank you very much for coming on the show and sharing. What's the best way for people to get hold of you?
If you go to our website, elitetraders.io, or on Instagram. Now, you got to be careful. There's a lot of fake Instagrams out there. Or we're just getting back on YouTube as well. So if that's a way to do it, just look at Elite Traders on YouTube.
Brilliant. Well, look, what we'll do, folks, so you don't have to click in the wrong place and find somebody trying to scam you, is we'll put the link underneath the video. You can go and check out all the links in there. And whilst you're down there, hit subscribe, click on like, click on that notification bell, and click on all, and we'll see you in the next video.
Awesome.